We're going to start with the Employee Retention Tax Credit, and here's a brief overview. It was created as part of the first stimulus package last March of 2020, but has been significantly enhanced with the following two stimulus bills. In its current state, it's retroactive back to March 12th of 2020, and it continues to be valid until the end of this year. So you have over a year and a half of which time you can get this credit for your business. Now, the max credit that you could receive for 2020 is $5,000 per employee. Now, what they've done with these stimulus packages, they've now increased that for 2021 to $28,000 per employee. Yes, you read that right. The credit that you can receive through the Employee Retention Tax Credit is up to $28,000 per employee just for this year. And how they've determined that is at $7,000 per employee per calendar quarter. And we'll be going into more details on what those wages are and how to necessarily calculate what the max credit should be for your organization. Another thing that they've done in the most recent stimulus packages is they've now made this available in conjunction with PPP loans. And we'll be going into that in more detail. But when they first designed it, you had to pick between a PPP loan and the Employee Retention Tax Credit. The vast majority of businesses went with the PPP. Why? Well, number one, it was talked about much more than the ERTC. At the time, it was a better program that put more money into businesses' pockets, and you had the full weight of all of the banking institutions behind implementing that program. So the ERTC now is just as valuable, if not more valuable, than the PPP loan because of these new changes, but it's not getting the proper attention that we believe it deserves. And that's why we're glad that you're here listening to this webinar, and then hopefully working with us to secure this tax credit for your own business. Now, I want to be clear, when we're talking about credit, unlike traditional credits, this is not a credit against future taxes, but it is actually cash back to the business. It is money in your pocket. Can't stress that enough. So what are the eligibility requirements? Well, for 2020, they're slightly different than they are for 2021. For the 2020 tax credit, you have to have 100 or fewer full-time employees. You have to have paid wages between March 12th and December 31st of 2020, and you either have to have partially or fully suspended operations or have a 50% decline in gross receipts. I'm going to touch on the operations here shortly because that's where we receive a majority of the questions on whether or not a business is eligible. For 2021, they relaxed these requirements and actually broadened them to include many more businesses. Now, in order to qualify, you have to have 500 or fewer full-time employees, up from 100, and the qualified wages are based on the calendar quarter, not the calendar year. And then they maintained that partially or fully suspended operations, but they reduced the decline in gross receipts from 50% to only 20%. Now, many of you are maybe familiar with the PPP loan, particularly the second wave. The second PPP loan, they limited it to a number of employees of only 300 or less. So now there's employers with 300 to 500 employees that are not eligible for the PPP loan, but they are eligible for the Employee Retention Tax Credit. One thing I do want to mention in particular is that part-time employees are included in your tax credit, but do not count against the employee count. What I mean by that is wages that you pay to part-time employees, you do get the credit for, but they do not count in terms of the full-time employees. So if you have a business that has 120 employees, 40 of which are part-time, 100 or 80 of which are full-time, you still are going to qualify because your number of full-time employees is under 100. Some additional requirements for eligibility. It is now available to tax-exempt organizations. It now includes U.S. territories such as Puerto Rico, U.S. Virgin Islands. However, self-employed and 1099s, independent contractors, are not eligible. But if they do have employees, they can still apply for the credit for their employees' wages. And in order to be eligible, you have to be in business prior to December 31st of 2020. Now let's get into the most questions that we receive when it comes to this. Am I eligible, right? And how am I eligible when it comes to what's considered suspended operations? Well, when it comes to suspended operations, the first item is that you must be under a government order that limits commerce, travel, or group meetings. Now, this may not seem as difficult as it is, because really it's a very broad definition. We're talking about any order, whether it be from a city or a county or even the state level, all the way up to the federal level, qualifies as a government order. And when we're talking about limiting commerce, travel, or group meetings, it can be as little as affecting the business operations, reducing the hours, or reducing the capacity that you're allowed to have in your location. It could also mean sheltering in place or stay-at-home orders, or even curfews. Now, when it comes to group meetings, it could just mean, like, most people think about religious institutions that it impacts, but there's a lot of other companies out there that rely on group meetings where they weren't able to hold them in a similar fashion that they would qualify. The other thing that is pertinent to suspended operations is whether the business was essential or non-essential. Now, if you were considered an essential business during the pandemic, you are still eligible even if you were partially suspended. Grocery stores, gas stations, while they were deemed essential, their hours were impacted, and then they would be eligible. And certainly if you were considered non-essential, you are automatically eligible with that government order that's limiting your business with either commerce, travel, or group meetings. Now, one thing the IRS has done is that they've left it up to the employer to determine whether their business was deemed essential or not. One thing I do want to mention, though, is that if you are an employer who just voluntarily suspended operations, it does not mean that you are eligible automatically. You have to qualify under what we're discussing. So that's an overview of suspended operations. Now let's get into what we mean by partially suspended operations. You weren't fully suspended, but you did have part of your business impacted in a minimal way. Well, any business where a government order reduced the capacity or the hours of operations, they're considered partially suspended. The most common one we think about here is restaurants, gyms, hair salons, anything where they were reduced capacity, retail locations, they're considered partially suspended because they're not able to operate at 100% capacity or 100% of their hours. Now, any entity, the next item is any entity not able to hold meetings. Like I mentioned in the previous slide, most people think of religious institutions, but let me give you another example. We have a client in the insurance industry who primarily markets to school teachers. And their business is designed around going to the schools and meeting with those school teachers on location. Well, guess what? They're not able to do that anymore. The schools are locked down from any outside visitors. They're not able to meet with those school teachers. They're not able to hold those meetings. And because of that, they qualify as partially suspended. Another category are businesses that rely on suppliers that have been partially suspended. This could be a parts store that's not able to get the parts from their suppliers in order to resell them to their customers. It could also be a manufacturing company that's not able to get the materials that it needs in order to complete its product. In both those instances, the business qualifies not based on what they are doing, but based on what their suppliers are under. Another thing is multi-purpose businesses. If one part of that business is suspended, then the entire business is considered suspended. I'll use the restaurant example again. Say a restaurant has indoor dining, has a catering business and also does takeout. Well, the takeout business may have stayed the same or even grown. The catering business could or could not have been impacted, but because the indoor dining is limited, the entire business is eligible. Now, there's also where multiple location businesses are eligible if only one location was partially suspended. Think about a national retail chain, right, that has locations in multiple states. Well, there could be in one state where they weren't suspended at all and they were allowed to continue as normal. But they had one location in a state where they were essentially shut down or they were severely restricted. Well, just because that one location was restricted, the entire business is eligible, even the locations that were impacted at all. Now, if you come to all of this and you still don't know if you're eligible, the IRS, in true IRS fashion, has come up with a test. And they call this the comparable operations test. And what it does is it takes you through 4 factors to determine if your business is eligible based on your ability to take your business from working in an office or workplace environment and transitioning it to an at-home environment. I won't go into great detail on that, but that test does exist for any of these businesses that are still questioning their eligibility. And I do want to mention that one of the areas that gets overlooked the most is non-essential medical businesses. Dentists, physical therapy, any of these businesses that were forced to close or partially close due to the pandemic are consistently eligible for this program based on what orders they were under. Now, lastly, I do want to say is just being required for modifications does not create an automatic eligibility. So if you were forced to buy cleaning products, or you were forced to put up shields, or you were forced to buy masks for in your location, just that alone does not make you eligible. But typically in those situations, you will be eligible over what I've previously discussed. So we spent a lot of time on that. And I believe it's important because, like I said at the very beginning, this is one of the areas where we get asked the most questions. So if I can answer as many of these questions throughout this webinar, hopefully then as you as the business owner and business decision maker can make that determination on your own. So the next thing I want to talk about in terms of the retention tax credit are qualified wages. What do we mean by qualified wages? Well, qualified wages include the gross wages that you pay your employees, but also the employer's contribution of group health and retirement. Now, qualified wages is how we base the credit per individual. We'll take the gross wages by employee and apply that to the employee retention tax credit to determine what that tax credit is for each employee. For 2020, in order to max out the credit, you had to come up with $10,000 in qualified wages. And $10,000, you were up to 50% credit of that $10,000 is how we come up with a $5,000 max credit for 2020. For 2021, you can get up to $10,000 in qualified wages. It's based on the calendar quarter for that employee. And then you're allowed up to a 70% credit of that $10,000 for each employee. Hence, that $7,000 credit per employee per calendar quarter. Now, like I mentioned at the beginning, for 2021, all 4 quarters are covered for this. So you can continue to get that $7,000 credit for each quarter, totaling the $28,000 credit for 2021. Now, one thing of note is that qualified wages used for PPP forgiveness are excluded. And we're going to talk about this later in the webinar where I go over our PPP loan forgiveness process, because there's a better way to do this in order to maximize money for your business. Another thing is that the qualified wages you use for your ERTC are excluded for other programs. And I think I'm just going to stop here and just mention is that as part of our Stimulus Resource Center, This is the value that we bring to our clients. It's not just the information. It's not just making sure that you're eligible. It's about combining all the programs that we're talking about on this webinar to make sure that we maximize the money back for your business. That's why we're here. That's what we do. And it's what we've been doing for many years prior to what happened last year. So how do you claim this credit? Well, there's 4 ways to claim the credit. First of all, you can claim it on your payroll tax return at the time that you file. The IRS will then send you a check back for the amount that you claim. You can also claim it on your amended tax return. For all of the 2020 ERTCs, we're amending those payroll tax returns. The IRS is processing that and then sending a check back for what is owed back to your business. Now, for those businesses that are cash strapped immediately, there's 2 options that the IRS has presented. Number 1 is you can request an advance in the current calendar quarter. So, hey, I need help making my payroll. I'm going to go ahead and request an advance. And then all you do is you allocate that on the tax return when you file it. And for those businesses that are really struggling to meet payroll, you can also reduce or eliminate your current federal tax deposits. So when you make payroll, maybe you have payroll every week, right? Well, it's one thing to be able to pay the employees their portion, but coming up with those tax deposits may be difficult. Well, the IRS has allowed you to eliminate those and then apply it on that quarterly payroll tax return as the employee retention tax credit. So that's a great option for those businesses with cash flow concerns. Here are a couple examples of what we've been able to get for our clients just with the employee retention tax credit. Now, that first example on the far left, 92 employees, some of which were part-time employees, we were able to go back to 2020 and get them $688,000. That's not a typo. We got them nearly $700,000 just for last year alone. Now, this is a company that also received a $1.1 million tax credit. So on top of that, they were able to get this money to help them meet their payroll obligations for last year. Now, this is a company that's not eligible for a second PPP loan and not eligible for the 2021 employee retention tax credit. But despite all that, this was of significant value to their business. Now, the middle company, much smaller, 19 employees, this is a company that received the PPP loan last year, is not eligible for the PPP loan in 2021, but is eligible for the 2021 employee retention tax credit. And in their case, we were able to go back and get them $111,000 for the employee retention tax credit for 2020. And because of their eligibility for 2021, the tax credit for the first calendar quarter, just Q1, is $133,000. That's right, $133,000 just for the first quarter. And we believe they'll be looking at a similar amount for at least the second quarter. Significant dollars back for your business. The last example, 10 employees. Now, this company got the first and second PPP loans, and they're also eligible for the 2021 employee retention tax credit. So they're able to get all of it, which is great. And we're recommending any business that's eligible to receive a second PPP loan, you should absolutely go for it. That is money that is available to you and you should use it. Now, we just augment whatever you get for your PPP loans, we augment that with the employee retention tax credit. And for this company, in addition to getting 2 PPP loans, they're getting $43,000 back for last year, and they're getting $31,000 just for the first quarter of this year. And I believe we'll get something similar to that for the second quarter as well. So these are significant dollars that go back into the business's pocket. And if you have any questions about your eligibility or about our program, feel free to contact us, because we've put together an amazing stimulus resource center that helps businesses who need it most get access to the funds that are available and maximize those funds and those programs. Now here's the overall program benefits. Oh, skip the slide. What does this mean for your business? Well, this is through our program, there's a max potential credit of $33,000 per employee. $33,000. And like I've mentioned, this is real cash back to your business. This is not a credit against future taxes. This is money in your pocket. Like we've talked about, you're able to receive an advance on payroll costs or eliminate federal tax deposits in order to help out with immediate cash flow needs. Now, here's what's really great about it. There's no income tax implications. The money you get back through this program, you do not pay taxes on. In addition, unlike the PPP, there's no forgiveness process. There's no forms to fill out. There's no submitting it to your bank and waiting for them to approve it, and then submitting it to the SBA, waiting for them to approve it. Once you're eligible for these funds, we file the necessary payroll tax returns, and that's it. No further forgiveness process to go through. In addition, there's no requirements on use of proceeds. As long as you've already spent the money on those wages, when that money comes back to you, the business or business owner can do anything it wants with it. They can use it for future growth. They can use it to compensate employees. They can even put it in their own pocket to make up for money that they've lost throughout this pandemic. In addition, the ERTC gives companies the ability to offset previous year's tax burdens. Maybe they got behind on their taxes before the pandemic. Maybe they got behind on their taxes as a result of it. But either way, this program, you're able to offset those previous years and get back to zero owing to the IRS, which for a lot of people is a great place to be and a place they want to avoid at all costs. Now, what do we do? The beauty about our program and our Stimulus Resource Center is that we handle the entire process. We take you from eligibility to funding. And not only do we make sure the paperwork is done right, we follow up with it directly with the IRS so that you get your funds as quickly as possible. And we can't stress that enough. That's why we do what we do. We're here for businesses. We believe in small businesses as the backbone of our economy. And it's been our driving force for over 20 years. And now more than ever, we're here to help those businesses survive and thrive in the coming years.